Oh snap! I have some things to share with you here in this video. On a technical basis, it looks like we have a better understanding of what could be coming next in our markets. You know, I always hate technicals to a certain extent because they kind of tell you after the fact. But sometimes technicals can give you a pretty good leading indicator, and I think that's what we have going on right now in our markets. This may excite the bears, this may scare the bulls. That's not what I'm trying to do. I'm trying to just give it to you straight and let you know what I'm seeing out there. There's some problems coming. Okay, let's just be honest with that. You cannot go through a record rally. This rally has broken many records, historical records. This is very, I guess, a historic rally is probably the best way to put it. And you cannot expect to just go straight up forever. I think we're at the point where it may start to curl downwards. And I think that's what the technicals are also telling us. Now, we did have Adobe here in after hours, down about 10%, 10.5% currently, because of really one specific thing in particular that I do want to talk about. Now, with all of that being said, what are the next important major events for the markets that could give us a little bit more of this downside? Well, there's one of them coming tomorrow. The rest of them will be next week. And I do think this is a very important pivot point for the markets. With that said, what could this do to Tesla stock? As you know, Tesla is already the worst performing stock in the S&P 500, just getting absolutely beaten to a pulp, let's be honest. If we do go through some kind of correction or crash event here, where could this take Tesla stock? How bad could things really get for Tesla? We have all of that information and much more here in this video. Hit that like button as well as subscribe to the channel because it's free 99. It costs you absolutely nothing to do. And especially if this is such an important moment of time as I expect it is, well, maybe pushing this video out to as many people as possible, sharing this video with a buddy, a friend, a pal, could help save someone some money and get prepared for potentially what is coming next. So let's jump into it. So I guess let's start with what a volatile trading day today was. Oh my gosh, you were up, you were down. At one point here, the NASDAQ went green at about 2 p.m. today, and then just sold straight off. And you were down almost 1% at one point, and then you seen this aggressive bounce towards the end of the day today. This was very interesting, what you actually seen here with this drop, because at one point you hit 436.39. That was the low. Now, that was under this channel here. And that's really a important level for our markets. If you break under this bullish channel, this turns into what could be a bear flag pattern. And just in case everyone forgot, that's kind of what we were doing with Tesla stock for a while here. When you hit that low at about 174, came all the way back up to about 206. That was just recently here, and you were in this bear flag pattern. And what happens? If you break this bottom line, then you can be in for some large downside. And from my perspective, that looks like where we are kind of at right now. Now, it also looks like, to what I referenced in the beginning of this video, I don't really like technicals in the sense of, unless you have some kind of clear pattern, it usually doesn't give you a good indication of what is coming next. For an example, where technicals kind of work is back here in this November-December period. I was very bullish on the technicals at the time because you were in this downtrending channel here, this bear flag pattern, if you will, this channel right here, and you broke above this line to the upside. And I said that was a very strong indication that you were going to go higher. Now, I didn't expect the markets to run this high, let's be honest. I was surprised there, but I wasn't surprised that the markets turned bullish. Now you're in this channel. It looks like you want to break to the downside, especially that bounce you've seen today towards the end of the day. Sure, you're not usually just going to break straight under that level and just gap down and keep falling. You need some kind of catalyst. You need some kind of reason. And You know, PPI today was that reason, but people are still trying to hold on to hope that things are going to be fine. The Fed's going to be cutting rates. All is going to be fine and dandy. We'll talk about that a little bit more throughout this video when we talk about the next catalyst that we have for our markets. But just on an overall technical basis, you can see a downtrending channel is forming from the high that you hit on March 8th. The markets have hit that high and started to make lower lows. Over the past 3 days, you have hit a lower low. You can see the close of March 12th was $443.66. The close of yesterday was $440.25, and the close of the day today was $439.14. So usually when you get these kind of huge rallies and then you get 3 declining closes, it does tend to set you up for maybe a little bit more downside. Now, connecting this to kind of the overall bullish channel we have been in for a while, and the fact that you're right on this line, if you do get downside from here under this line, under this channel line, that could set you up for a pretty sharp drop. At least that's what it's looking like to me. And it looks like we're right at that point where markets have started to curl over, that maybe these technicals are a little bit more of a leading indicator and not just telling us what already happened. So momentum definitely starting to roll over a bit in our markets. Now, the same is true for the S&P 500, but it does look like the S&P, the SPY, is holding up a little bit better than the NASDAQ, the triple Qs, and I believe that's probably just, you know, the NASDAQ has rallied more and more aggressively. So that's kind of what I would expect the NASDAQ to lead the way down if things really do start to kind of turn downwards. Now, tomorrow is a little bit more important of a day than just other random days. It's your first triple witching of 2024, and that will occur tomorrow on March 15th. Now, Google says, take it for what it is, triple witching days are known for high volatility and volume. The convergence of multiple expirations can lead to increased trading activity and volatility in the financial markets. Triple witching itself doesn't move the stock market, but it does create increased volume and liquidity. This can cause wild swings in volatility, but typically it neither moves the market significantly higher nor lower. The thing that I really want to be watching for with tomorrow's triple witching is, again, we've rallied aggressively in, since the last 3 months, right? Ever really since November. There's been a lot of bullish positioning. Does that positioning start to switch towards a little bit more defensive or a little bit more of bearish positioning? And I mean, logically speaking, that's probably what should happen, but I want to see if that does indeed happen. Could set us up for, again, a little bit more volatility. But the most important thing, again, is if we just close under this line or not. That's going to really be important. Or if tomorrow's a strong day to the upside, then maybe we could end up retracing to this upper bound, which could be in the 450 to 460 level on the triple Qs. Although I think that's less likely, still, it's a possibility. The main problem that we have right now is all of your inflation reports have come in hot. The markets really haven't, and this is for like all of 2024 so far, everything has come in higher than expectations. Well, that's, I guess I should say that hasn't been a problem for the markets, because the markets are like, the Fed's just going to be cutting rates. There's no chance of a rate hike. We're going to get some kind of cut in 2024. Well, it looks like to me, the Fed is not going to guarantee that anymore. The Fed is going to obviously remain very data dependent, but I think the Fed has to almost, like literally has to, make it an option to be able to raise rates again. They have to kind of forecast the markets. If the data does not go in which the markets are hoping as far as inflation, if inflation does actually start to spike again, the Fed has to be in a position to raise rates. The Fed has said many times before, they would rather raise rates too much and cause a recession than not raise rates enough and have inflation really just stick around for many years. So that leads us into really the biggest catalyst of all, which is going to be next Wednesday, 5 days, 20 hours, and 17 minutes from now at the time of recording this video. I love how specific it is, even down to the minutes, but that'll be next Wednesday at 2 p.m. You'll hear from the Fed. You will also get a summary of economic projections. That's the important part. It's pretty much guaranteed that the Fed's not going to forecast the same 3 rate cuts in 2024. With this bout of inflation that we're feeling so far in 2024, it looks like the most kind of bullish outcome could be 2 rate cuts expected in 2024. The most likely outcome is probably 1 rate cut priced in for 2024. And your kind of gray swan event would be like 0 rate cuts priced into 2024 from the Fed, or potential rate hike priced in. Now, I don't think the Fed's going to price in a rate hike for 2024. I think the Fed's probably going to price in 1 rate cut for 2024, but I think Powell's going to be very hawkish on the press conference. He's going to really hawk down and say if they need to raise rates, then that's what they will do. And I don't think the markets are open to the possibility right now, just based on what stocks have done, for a potential rate hike or just no rate cuts in 2024. And let me show you exactly why that is. If you look at the Russell, IWM, the Russell 2000, your small cap stocks, you really underperformed today. And the Russell has not done nearly as well as your other indexes. Then when you take it a step further and you're actually looking at stocks that are deemed as very interest rate sensitive, they have done terrible in 2024, okay? It's like those stocks, like a Tesla, down 35% year to date. Look at a Fubo, just destroyed, okay? Absolutely wrecked in 2024. I mean, almost falling to new lows, right? It's been like every day has been red. Today, the stock was even down about 4%. Look at SoFi, a stock that just had fantastic earnings, big guidance, right? Big beat to guidance. The stock can't catch a freaking break. So it seems like some areas of our markets are priced for no rate cuts or maybe even a rate hike. It looks like other areas like big tech, AI stocks are not priced for that. The NASDAQ, the S&P broadly are not priced for that. And I do think that becomes quite problematic coming next week when we hear from the Fed. Let's be honest, the Fed is not going to be as dovish and quote unquote bullish as they have been over the past couple of months. Not with this latest PPI report, PCE, and CPI report. It's just not going to happen. The question is, are the markets prepared for a hawkish Powell? I don't think so. I don't think they're prepared for no rate cuts or the optionality of the Fed putting a rate hike back on the table. And I think at this point, the Fed has to put the optionality of a rate hike back on the table. And I think this is what could give you a correction in the markets. The markets are obviously going to remain data dependent, and your inflation reports are going to be that much more important, but the markets are going to look back and say, oh crap, CPI was hot, PPI was hot, PCE was hot, maybe we do get a rate cut. And then I think you could get some selling in markets after the fact, right? Just because the reports on inflation were negative. And again, even when you look at TLT today, TLT sold off big time. It responded to the hotter than expected PPI. The markets themselves did not respond as much, at least not by the close of the day. You were down about 1% on the NASDAQ at one point, pretty close to that. It seemed like markets were responding at one point, and then you did get that ferocious bounce back towards the end of the day. Overall, I don't think you're set up in a very optimal position heading into next week. Now, NVIDIA specifically has their GTC conference coming on Monday. Now, NVIDIA on the charts looks like it really could go either way. I think it's due for a correction here, but could it go the other way? I think so. I do believe on March 8th that killed a lot of momentum to the upside, and you have been in a slight downtrend ever since then. So odds are you probably break lower from here, and that's not fantastic for the AI trade. What's also not fantastic for the AI trade is Adobe, down about 10% here in after hours, and it's really based on their guidance. So for fiscal Q2, this current quarter, Adobe guided for digital media net new revenue, a key metric, of $440 million, missing analyst estimates of about $460 million. Adjusted EPS was expected in a range of $4.35 to $4.40 on revenue of $5.25 billion to $5.3 billion, compared with analyst estimates of $4.39 on revenue of $5 5.31 billion. So Adobe came in a little bit light on the revenue side. EPS actually came in a little bit better, potentially than analysts. Well, kind of on the high side of analyst estimates, right? They went a cent higher than analyst estimates, but 4 cents lower. So if Adobe comes in right where, they expect on the high side, they're going to beat a little bit. If they come in on the low side, they're going to miss a little bit. So this was a guide down for this current quarter. And I think that kind of throws a little cold water on the AI trade, because everyone's expecting these AI companies to give you huge guidance beats and raise guidance. And that's just not happening with Marvell, Broadcom, now Adobe. All these other chip companies, they're just unimpressive compared to NVIDIA. Now, again, specifically with the GTC conference with NVIDIA, I think there's a lot of hype around, what could be announced. I think there's a lot of high expectations either way. So a lot of the time you'll get a, buy the rumor, sell the news event. You've kind of seen us sell the rumor, maybe buy the news event. It's very hard to try to guesstimate what NVIDIA is going, or how NVIDIA is going to react after their GTC conference. But I would say a lot of this recent run-up that you have seen, even after earnings, has been based on what could be announced at this GTC conference. So I think there is high expectations and potentially a sell-off following that event in and of itself. Because what are you really going to say that's going to get people excited? I mean, come on now. I don't know. Maybe there's something that is groundbreaking that could be huge for the business that is announced, but I think it's unlikely. Now, coming tomorrow morning, you are going to get some data coming out. Export prices and import prices month over month. You're expecting these to fall from last month. Again, if these come in higher, that's kind of inflationary data, right? So watch for that. You do have industrial production month over month expected to come out at 9:15 a.m. At about 0% month over month. So, that wouldn't be a terrible number as far as what the bulls would want to see the economy slowing down. We are going to get Michigan consumer sentiment coming out tomorrow morning as well. You're expecting the same reading as last month at 76.9. So you're not expecting a change on the headline number. But I think most importantly, it's about your 5-year and 1-year inflation expectations. They're expected to stay the same from last month. So 2.9% was the number last month. That's the current expectation for 5-year inflation expectations. And your 1-year inflation expectations are expected at 3%. That is also the same as last month. If those come in higher, then that also throws another problem with inflation expectations potentially getting entrenched higher. Although there's other metrics to look at this. 5-year break-evens on bonds. There's other different surveys that come out. But the Michigan Consumer Sentiment Survey is a very important one, and if it does show a uptick in, inflation expectations, that's not going to be great. You also have Michigan current conditions and Michigan consumer expectations. If expectations for the consumer come in higher, then maybe that means the economy may be a little bit stronger. People feel confident. They're going to be spending some money. And as well as that, Michigan current conditions, you're expecting that to fall a little bit from 79.4 to 79.2. Slight deceleration there. That the lower the better really for these numbers for the bulls. If you're someone that wants to see this market continue to rally and not get rug pulled from the Fed next week, you want to see people feeling less confident about the economy, spending less money, right? That's really what you would want to see. And then consumer sentiment, the overall number again is expected to come in at 76.9, the same as last month. And we have recently seen a jump here. So to see a fall would be good news. If this number comes in higher, that's not necessarily great. And this number's down big from where it used to be. Even back in like 2019, it was at 99.3. People felt good about the economy. So there is definitely some room to come in higher than what the current estimate is. And again, that would be bad news because it would show people think the economy is doing just fine. Now, the Michigan Consumer Sentiment Survey, it tends to give you quite a large move at 10 a.m. tomorrow, Eastern Standard Time when it comes out. really the 5-year and 1-year inflation expectations, if they move a lot, then you can see a larger move from the markets, right? But if 5-year, 1-year inflation expectations come in line with estimates, you know, the same as last month, I wouldn't expect this to be any huge event to the upside or to the downside tomorrow. Overall, again, I do think next week's catalyst with the Fed could be the event that could really upset the markets. I think if there was one thing that I would be waiting for, it's specifically that. And kind of like what we had in August of 2022, where the markets got super excited for the Fed, and then the Fed came out, kind of crushed everyone's hopes and dreams. The NASDAQ fell 4%, you know, after this initial like 4% drop. It was a very rough correction at the time, just based on the markets and the Fed being totally disaligned. The Fed's like, yeah, we're gonna have to keep raising rates. That's when they introduced kind of the higher for longer situation. And yeah, you really upset the markets at that time. I think you're kind of in the same scenario where the markets have just been in full-blown denial for a while, with this rally that just continues higher, even though inflation data has continued to come in poor in 2024, continuing to show inflation spiking and not falling in 2024. Now, as far as my specific expectations, I think a lot of it comes down to the AI trade with NVIDIA. If NVIDIA really does start to give up at the same time the Fed is hawkish, you could be looking at quite the downside here. Now, to fall about 7.5% would put you back to about 405 on the NASDAQ. That would be your 100-day moving average. I think that's a good first stop. 3% lower from here would put you at your 50-day moving average. I think you're likely to fall under that just based on the Fed alone. Now, again, if NVIDIA is bad, then you could fall further from that. Your 100-day moving average would be the next stop. But even back to almost your previous all-time high would be about 390 on the NASDAQ. And that would be, I think, the full-on kind of correction zone that I would be watching for. That's where I would expect a more solid bottom that would still be down about 11% from here. Like I said in the last video, some people on Wall Street, like Josh Brown, someone I respect, you know, very highly, that kind of says it how it is. He thinks you could be looking at a circuit breaker if the Fed were to suggest that maybe they need to raise rates again, or that that's even a possibility. I'm not saying the Fed's going to say they're going to raise rates, but if the Fed says it's a possibility they would need to, yeah, that's a problem. And that would likely give markets quite a bit of downside. Now, again, back to what I said earlier, I think Tesla is better priced for bad news. Clearly the worst performer in the S&P 500. It's got to be priced better for bad news, right? But I would still expect to fall at bare minimum down to about 150. 147 specifically is this gap to fill level. If you fall under that, I think it's going to be relatively short-lived, but you could fall as low as about $100 per share over the next couple of weeks if the Fed is hawkish, if NVIDIA's momentum does start to really give up. That would be the level I would be targeting. I still think 150 is going to be a strong level of support. I think you likely get some buyers stepping in that zone. I think you'd stay under 150 for only a short amount of time. But could you fall lower than that? Of course. I think 130 is another very important level to watch, another kind of important round number, if you will. And just getting down to 130 from here, you got to be careful with your bearish expectations. When Tesla's the worst performer in the S&P, everyone kind of goes crazy with the downside targets. But even to get down to about 130 from here would still be downside of almost 20% from current levels. Could that happen? Of course that could happen. Is that likely to happen is a better question. And, you know, I would say it's probably not likely, but it's not super impossible. And just for context, to get down to about 105 on Tesla, that would be about 35.5% downside from here. Does that sound likely to me? Not really. Is it possible? Yeah, but I think you're closer to a bottom for Tesla. I think, again, Tesla's priced better for bad news than the broader markets. Let me know what you think about this information. I do believe a correction is likely coming for the markets over the next couple of weeks. But let me know your thoughts on this. Let me know your opinions on this. Do you think the Fed's going to be hawkish? Do you think the Fed's going to not be? Do you think they're going to be dovish? Let me know what you think down below in the comment section. Hit the like button as well as subscribe to the channel. If you guys want to come trade with us live in real time, check out that link down below in the description of this video. And follow the X account. It is Michael Tyler over there. Love to see you over there and chat with you. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.